Hey everyone, welcome back to Crypto Pulse, where we decode the crypto world to help you stack those gains. Today, we're diving deep into why 2025's crypto bull run is set to 10 times your wallet, and I've got the on-chain proof to back it up. If you've ever wondered how whales spot the next massive pump before the masses, or why this cycle feels different from 2021, stick around because I'm about to reveal signals that could change your portfolio forever. But fair warning, this might trigger some serious FOMO. Let's jump in. First off, let's talk about what makes a bull run tick. In crypto, it's not just hype, it's data. On-chain metrics are like the heartbeat of the blockchain, showing real activity from wallets, transactions, and smart contracts. Think of it as peeking under the hood of a race car before the green flag drops. Back in 2017 and 2021, these signals predicted explosions months in advance. And guess what? They're flashing again for 2025. Take whale accumulation. For starters, whales, those big holders with 1,000 or more BTC, are quietly stacking like never before. According to on-chain data from platforms like Glassnode, whale wallets have increased their holdings by over 15% in the last quarter alone. Why does this matter? Because whales move markets. When they buy in bulk during dips, it's a precursor to retail FOMO kicking in. Remember 2021? Whales loaded up in late 2020, and boom, Bitcoin surged from $10,000 to $69,000. We're seeing the exact same pattern now, with Bitcoin hovering around $60,000 post-halving. If history rhymes, we're looking at $100,000 plus by mid-2025. But here's where it gets juicy. It's not just Bitcoin. Ethereum's ecosystem is priming for an epic alt season. The Pectra upgrade, rolled out earlier this year, slashed gas fees by up to 70% and boosted scalability. On-chain, we're seeing active addresses on Ethereum jump 25% month over month. That means more users, more DeFi activity, and more liquidity flowing into alts. Solana, for instance, is already benefiting. Its transaction volume hit all-time highs last week, thanks to meme coin mania and AI integrations. Let me share a personal story to drive this home. A couple of years ago, during the 2022 bear market, I ignored these on-chain whispers and held on to some overhyped tokens. Lost big. But then I started tracking metrics like mean coin age, basically how long coins have been dormant. When it starts rising, it signals HO dealers are confident. Right now, Bitcoin's mean coin age is at levels not seen since pre-2021 bull. I pivoted my strategy, loaded up on ETH during the dip, and rode it to 3 times gains already. You can do the same. Start by checking free tools like Dune Analytics or Into the Block for these insights. Now let's break down 3 key on-chain proofs that scream bull run incoming. Number 1, network value to transactions ratio, or NVT. This is like a crypto P/E ratio. When it's low, the network is undervalued relative to its activity. Bitcoin's NVT just dipped below 50. Historically, that's a buy signal that precedes 5 to 10x runs. For context, in 2020, it bottomed out before the massive surge. Proof number 2, exchange reserves are plummeting. Over 200,000 BTC have left exchanges in the past 6 months per CryptoQuant data. That means holders are moving to cold storage, reducing sell pressure. Combine this with institutional inflows, BlackRock's ETF alone sucked in $20 billion this year, and you've got a supply shock brewing. Less supply, more demand, prices go parabolic. And proof number 3, the rise in stablecoin inflows. USDT and USDC minting has surged 30% YTD, hitting $150 billion in market cap. Stablecoins are the on-ramp for new money. When they're flooding in, it's fuel for alts. Look at prediction markets like Polymarket. They're exploding with bets on everything from elections to sports, all on-chain. This liquidity is trickling into AI coins like FET and TAO, which are up 150% already this quarter. But hold up, bull runs aren't all sunshine. We've got risks like regulatory hurdles or macro events. The Fed's rate cuts could accelerate things, but a recession might delay. That's why on-chain data is your edge. It cuts through the noise. For example, monitor realized cap HODL waves. Short-term holders are selling to long-term ones, a classic bull setup. Diving deeper into alts, Solana's on fire with its meme ecosystem. Pump.fun launches have created overnight millionaires, but also rugs. Onchain. Check for dev wallet activity to spot scams. AI coins are the dark horse. Projects like Bitensor, TAO, are using blockchain for decentralized machine learning, with on-chain metrics showing 40% more staked tokens. If AI hype continues, and with ChatGPT integrations in wallets, it could 20 times. For Ethereum, layer 2s like Arbitrum and Optimism are seeing TVL, total value locked, skyrocket to $50 billion. On-chain, roll-up transactions are up 300%. That's real adoption. If you're building a portfolio, allocate 40% BTC, 30% ETH, 20% alts like SOL and TAO, and 10% stables for dips. Let's talk strategy. How to position for this 10x. Step 1. Dollar cost average into BTC during volatility. On-chain volatility index is high now. Perfect entry. Step 2. Use tools like Nansen for whale tracking. I spotted a $50 million ETH buy last month that preceded a 15% pump. Step 3. Set alerts for MVRVZ score. When it's below 0, buy. Above 7, consider selling. A quick detour into emerging trends. Tokenization of real-world assets, RWAS, is huge. On-chain, BlackRock's Beetle Fund has $500 million in tokenized treasuries. This bridges TradFi and crypto, potentially injecting trillions. Watch for on-chain metrics like tokenized asset volume. It's doubled in 2025 already. Wrapping up the proofs, let's circle back to the halving effect. The April 2024 halving reduced miner rewards, squeezing supply. Historically, prices peak 12 to 18 months post-halving, putting us right in the 2025 sweet spot. On-chain miner capitulation is over, with hash rate recovering. If you're new here, smash that like button if this on-chain intel blew your mind. It helps the algorithm push this to more degens like you. And subscribe now for weekly deep dives. Next up, we're exposing 2025's top meme coin plays. Speaking of Bitcoin's price outlook this September, the 200-day EMA is holding firm at around $104,588 as a long-term support. The RSI is at 55, which is neutral to bullish, perfect for building momentum without overheating. If we break above this, on-chain data suggests we could see the peak stretch into late 2025 or even 2026, based on cycle analyses from experts like those at Bankless. But remember, cycles have a 4-year rhythm, so don't sleep on Q4 fireworks. One last tip. Diversify, but don't overdo it. Focus on 5 to 7 solid projects with strong on-chain fundamentals. Not financial advice, folks, DIR, and only invest what you can afford to lose. There's also buzz around alt season starting soon, with capital flowing from BTC to alts, causing rapid gains and volatility. Indicators point to a launch between July and September 2025. And here we are in late September, prime time. On X, folks are hyped about AI-driven projects like Sapien, where crypto incentives power data for AI, potentially unlocking massive on-chain value in this bull. Thanks for watching. Comment below. What's your boldest 2025 prediction? Tag a friend who needs this wake-up call. See you in the next one. Stay bullish. That's it for today and Leo out. I hope you enjoyed.